Money for play. Credit without banks. Moderated by Oleg Ivanov, Berezka Ventures. With Dr. Sarah Grace Manski, Versus.io. Oscar Chambers, Umbria Network. Nils Tharandt Ortiz, Politan. And Tony Giordano, Giordano Industries.
All right. Hi, everyone. So this panel is actually going to be a fight chat between myself and Nils. So I hope that you enjoy. And we are going to talk about something quite important because it's all about this concept of money and how it's been changed thanks to new technology. So my name is Stefania Barbaglio. I actually work with Oscar on Umbria that is developing a DeFi product. And one of them is a cross-chain bridge that is very fast and they are implementing different chains. Then I have a YouTube channel and I work and advise different projects, including Giordano on NFT. And here is Neil. So introduce yourself.
Yeah, hi, Stefania. Hello, everybody. I'm Nils Ortiz. I'm the co-founder and CEO of Politan. I'm a trained lawyer. I worked in diplomacy for a couple of years before starting my first ventures, and I'm also an active Air Force officer.
Okay, so money for play, credit without banks. So let's maybe start to talk about how the concept of money has been changing, particularly empowering people, because nowadays, for example, I was thinking you can actually earn money as a liquidity provider, which is something great, and it wasn't obviously possible if we were not using blockchain technology. And that's quite a revolutionary concept, really, because you don't need to put the money in your bank to earn interest. You can actually provide the liquidity to a protocol and be your own bank, isn't it?
Absolutely. Well, if you look into banking, what is the role of the bank? It's a financial institution that is receiving deposits from the public, A, and B, lending money. But this business of lending money, the so-called peer-to-peer lending, what we are talking about right now, is even older than banks. I mean, in ancient times, who was lending? So you could lend me something, take an interest, I could lend you something. So that is a very old business. But nowadays, with technology we have, you have an increased trust level and have different features. Peer-to-peer lending, I was reading it in 2018, had a global market of $34 billion US, and it's increasing by over 50% yearly to reach in 2025 $589 billion US. That shows that peer-to-peer lending is huge, and there should be also a reason why the banks are not filling this gap anymore, why people are running away from the banks and start landing it in between. So something went terribly wrong with the banks, I would say.
Yeah, but the question is, I mean, we see that banks are struggling to kind of keep up with technology. And one of the things that is obviously happening is CBDCs. So they are trying to find another way to get into technology. They are going to launch their digital currency. Is that going to work? Because, you know, we have got stablecoin. And then banks are talking about CBDCs. They might going to happen, I don't know, 2-3 years, because nothing is going to happen right now, apart of China. Is that something that will allow banks to keep up their power or not?
Well, look at me. I am in my late 40s. I was raised a bit my culture from my parents. Whenever you have some money, you put it into the bank.
Yeah, exactly.
So when you ask me, oh, who are you landing money from, I would go to the bank.
Yeah, but that's because it's safe, isn't it? Because you put your money there and you have trust in the organization, the institution.
Well, maybe until the Euro crisis or Lehman, I thought it's safe.
Yeah.
And then actually I learned that the banks were playing with all my savings. And I learned, no, the bank is not a place safe, actually. So it might be safer if I take the money from him and give him back the money. He would not play with it around than actually the banks did. So this is what we saw. And actually what happened is the banks, for the consumer, what do? Today we have negative interest rate. If I have 100,000 in the bank account, the same money will be maybe 95,000 in a year, and then the inflation rate is not even discounted. So the business model of the bank is not going to the right direction, and then DeFi came, and I have an annual yield of for staking of 16, 17, 20, 25%. That sounds to me much more interesting than having a minus 1% in my bank.
Yeah, the other aspect is that banks, they have our data, right? And with the concept of CBDC coming out, that is gonna be even worse, because they are gonna know everything about each customer, which is a bit scary, I think. I mean, it's like Facebook and the metaverse. That's I don't know. I don't feel comfortable nowadays to give all data to an organization. And we have got other opportunities, because Bitcoin has proven able to create a different kind of ecosystem where you have control of your own data. And I think that's invaluable for everybody.
Yes.
I mean,
on the other hand, I mean, when you ask a bank for a loan, they will check.
exactly.
Will you get it? And
And also, Neil, can I start? They are going to choose if they are going to give the loan to you. It's not,
Exactly.
you want to get a mortgage? Are you going to get no mortgage? Maybe not. Maybe they don't want you. Who knows?
So, and with peer-to-peer lending, I mean, it's not a charity either. I'm lending money because I want to make profit out of this. But the barrier to lend money in peer-to-peer is much lower than a bank you have to understand, I mean, the guy in the bank, he's just checking all these boxes here. And if one box is red, he will not get that loan. He's only an employee. He's making his 2,000 euros a month. That's it. He's going at home. He want to have his salary. He want to have no trouble. And if you have peer-to-peer lending, it's your responsibility. It's only you and me. So you're gonna decide if you're gonna borrow me or you're lending money or not. So it's your decision actually, but which could be a good decision because you have the person in front of you who's willing to give it or not.
So if we are going to talk about what's the future for banks, what's your view? I mean, are they going to survive this DeFi revolution?
The banks will not disappear, of course. They inherit to a system. There has to be some pillars of stability. It has to be institutional. I totally agree. But the retail banking, as we have known it as before, that in every village, in every town, every bank, like 5 banks of the country, have a branch office, this will disappear. I think it's a bit like the travel agencies. I don't know where you come from, but when I was a child, in every city there was a travel agent, or 3 or 4. And basically in 20 years, at least in Paris, they all disappeared. There may be 10 travel agency brick and mortars is still there. Everything is online. Myself, I mostly use online banking, so I don't need a branch office. And this will definitely change. And the lending part, I mean, if we see that the growth rate of 50% peer-to-peer lending, it speaks for itself, right? The question is, how can you cluster, how can you make a background check of the guy you're lending your money? This is a big question. With Politan, we have a payment app that is simply aggregating your bank accounts, your existing ones, and your existing wallets. You simply connect it to the app and use it from there. And we also have instant credit. It's also a peer-to-peer solution we developed as a partner. And we also had the question, okay, this guy, he wants to have 1,000 USDT. How can we make sure he is paying it back? And then we decided, as we have a token, that we take a certain amount according of your previous lendings, and then we calculate the risk rate, and you have to have a collateral that is blocked by smart contract for the time of the lending period, up to 180 days. This is the way we found we could have a background check, a very fast one that is done in a minute. And not like a bank telling you, come back in 2 weeks, put your suit and the tie on. I think I don't even have a tie anymore, so I could not even ask a bank for a loan.
Yeah, exactly. Well, I get your point, and I think that obviously a regulation and this element about checking identity is obviously important. So in a way, regulation is important as well for the landscape to evolve. Well, if you want to get a loan, rather than going to a bank, you could perhaps get one from Aave eventually.
Yes, absolutely.
So that is basically an application where you can get a loan. The issue is about collateralization.
Yeah.
That's kind of an issue because it's still not kind of straightforward. You still need to hold assets, and with the volatility that is in the crypto space, that can be a challenge as well.
Because even with peer-to-peer lending, the fact that you want to have back your money you're giving to someone else you don't even know, and with a profit, you want to have certain layers of security and be ensured this will be the case, right? So, but what we see is there might be an increasing demand of loans, but it will simply shift to a unregulated sector. This is what we see with the peer-to-peer lending.
Okay, so so you basically said the banks are going to be here to stay. Are they at some point adding Bitcoin to the balance sheet?
I hope so. I mean, if I was a bank and cryptocurrencies, you name it, even so they're very reluctant calling it a currency because you have all this regulation behind the banks, and every state is, of course, afraid of cryptocurrencies because remember, in old times, who had the privilege to make money, to print money? The king. It was a royal privilege. It gave to the city, you can make your own money. And the same is happening today. It's a central bank who is doing the money. And when they start accepting it, they're, of course, afraid of losing control of the money circuit, which is the case actually already today. But on the other hand, cryptos became a new asset class, and you cannot kill it anymore. I would rather recommend everyone put a regulatory framework on it that is not killing it. Don't try to kill it, because otherwise it will go somewhere else. And as it decentralized, it will go somewhere else. You cannot stop that movement anymore. So getting back to the banks, they have to reinvent a bit their business model. And if you look up today, which are the new banks? Those are neo banks. It's Revolut, it's N26, and all those banks are like Revolut do come with a very clearly defined and simple crypto luggage. So that is even part, if you go to Revolut and there is no crypto, I think half of the Revolut users would simply not go to Revolut. So those neo banks are showing the old established retail banks where the journey is going to. Because if you look at the youngsters, I mean, those who grew up with a smartphone, if I look at my kids, I think sometimes there must be a magnet in their fingers. They never lose their iPhone. It's like stick to the hand. And those guys with the Revolut, they always do like this, click, 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 and do the payment and do everything online. They don't even need the branch office from the bank. And for them, crypto is as normal as fiat is. And if the retail banks are not getting that, I think they will have a very reduced role in the future, a very reduced role. They will totally disappear from smaller cities. Maybe in some big cities there might be some branch offices, but they will be reduced to an institutional lending role. But the retail market will shift. The new generation, those who are 20 today, and millennials, they have already a totally different approach of money, what money is.
And then obviously we are seeing company like Circle, they are becoming like a bank. They are like a new generation of bank. And stablecoin are going to be regulated very soon because that's next to happen. So perhaps the banking system is going to be very different than what has been. And this technology company like Circle, for example, they are going to be the new banks.
Yes, actually this was our first claim when I founded Politan 3 years ago. We said Politan is a bank, being a bank without being a bank.
Yeah.
Because at least in the European Union, with the PSD2 directive, we have a legal framework that allows fintechs to act as a bank. With open banking APIs, you can act as a fintech today as if you were a bank, without having all those regulations and deposit and all that luggage an institutional bank would have to carry. So this means the banking sector will be much more dynamic, but there are also going to be some downsides. I think there are also going to be some bankruptcies or some fintechs that will run away with the money. I mean, we have seen this already in the past. That simply burned the money of their customers and said, yeah, it's safe. It's all secured with smart contracts. Even so that there is certain instability. And I think it will continue like this. There's always, when you have a new market, there is still a bit of Wild West in this DeFi sector. And I wish that we have a bit, let's say, clear rules or like guidelines or best practices that could stabilize the sector.
Okay. Another aspect that I think is worthwhile to mention is about the fragmentation that is in the DeFi space, because you have got, as we said, company like Circle, then there are the other payment provider, other banks, they try to reinvent themselves, but it's kind of like very fragmented. So how we are going to actually keep all a unified landscape where you can actually move the money from one place to another one in a smooth way, because it is a challenge.
Yes, I see there is a big challenge of networks. Today, the biggest network is Ethereum, but if you go into micro-lending, there is no business case. I mean, I'm sending sometimes small tokens I'm holding like for $15, $10, and I pay like $100 gas fees.
Yeah.
Excuse me, that is not really the bright future I was dreaming of. And
but that's also it puts like a barrier for people to participate in DeFi.
yes, I mean,
So that's a big
micropayments, which is the majority of peer-to-peer lending, is microfinance, because especially the unbanked who are not getting the loan from the bank, they're asking the buddy next to you, could you borrow me $50 or 100? So the gas fees on Ethereum, the biggest network, is a challenge. The Berlin and London fork, who took place in August, they're still on Robster testnet. I don't know why it's taking that long. Is there a problem? Question mark. If so, that would even create a bigger problem, I think, for the whole Ethereum network. And then we have other networks like Binance, we have Giordano, Solana. And the problem is the cross-chain. We also built for our token a bridge for the Binance network, but it's not that easy. And it's a bit like the computers in the times back, like 30 years back. Microsoft, the operation system, they give everything with Microsoft.
I was just having a conversation earlier on. As you bridge from one network to the other, you actually need to have a liquidity on each network. And that's very important. So yeah, I think one of the major issue of DeFi is really interoperability and being able to develop bridging technology. They can be really cheap and fast as well, because at the end of the day, user experience is the most important point, really.
Yeah, especially for microfinance. I mean, like say up to $100 or $500, the gas fee should be around 10 or 20 cents. Sorry for all the miners here in the room. That is how much it costs.
Yeah, well, we are going to see where the money will go and how they are going to flow, and how the DeFi space is going to evolve. I think it's just a great place to be alive now and just watch what is happening in finance. Okay, thank you, Neil. And
Thank you, Stefania.
everybody for...
Thank you, everybody.